Hi, this is globalinvestorradio.com, and this is the first in the series covering Richard D Wyckoff's book, How I Trade and Invest in Stocks and Bonds, originally published in 1924. And this is one of the first quotes in the book: "We succeed in proportion to the amount of energy and enterprise we use in going after results." And there's a picture of the man himself. And this is the cover of the book that I'm reading from. This is one of Richard D Wyckoff's earlier books that he produced on trading. And his methods and techniques did change over the years. So I've tried to select different parts of this book that are still relevant to his latter day techniques. And this was taken from the chapter Successful Investing. As Charles H. Dow used to say, the public rarely sees value until they are pointed out, which means that the public does not lead but is led in speculation. It rarely acts until it is told to act, or until action of some sort is suggested by a bit of verbal information, a market letter, etc. But there is another kind of suggestion which is the most potent in its influence on the public, and that is the action of the market itself. A rising price for a stock suggests still higher prices, and declining quotations bear the inference that prices are going lower. Pools work on this weakness, which is due to ignorance on the part of the public. They accumulate a stock without advancing its price. Then when market conditions are favourable, they bid the stock up. This excites the public buying, because people always want to get in on something that is going up. Vice versa, groups will often try to depress a stock, counting on the public support when the issue begins to decline. It long ago occurred to me that success in the security market demanded an understanding of the operations of those who were most influential. Because these interests had been studying the business and operating in the market for many years, and were therefore experts, it was sound reasoning to suppose that a knowledge of the principles which they used in their market operations would enable one to detect their thumbprints on the tape and to follow with pleasure and profit. Large interests are practically always in the market. They usually have their scale orders in on both sides, so that they buy on declines and sell on rallies. They always have money with which to buy on declines because they sell on the rallies. They thus realise a profit as well as supply funds for the next decline. If the public would learn to do this, there would be fewer stock market fatalities. It is difficult to overemphasise the importance of studying the technical position, particularly when making a speculative commitment. Many people may say, what is a weak or a strong technical position? My reply is, in brief, that a stock is in a weak technical position on the bull side when it has been purchased and is held by a large number of outside speculators, when most of these are looking for a profit. When the price of the stock has advanced to a point where no further buying can be stimulated for the time being, it stands to reason that when buying power is exhausted, a stock must decline, no matter how strong its finances, management or earning power. On the other hand, a stock is in a weak technical position on the short side when the bears have exhausted their ammunition by selling all they can afford, and when the buying power of investment and speculative purchases is such that it resists the pressure of the bears. In other words, when demand overcomes supply. The weakness in such a position is found in the fact that all those who are short are potential bulls. They must sooner or later cover their commitments in order to close their trades. They do not wish to remain short indefinitely. It is a well-known fact that bears have less courage than bulls, and they are often obliged to buy at higher prices because the technical position becomes so strong that they cannot force the price lower. Bears, after they have sold short, are an element of strength, not of weakness. Much could be written on this subject, which, while far from being an exact science because of the numerous and changing influences that are being thrown into the market at almost every moment, is a study which well warrants the attention of every investor and trader. The old adage, well bought is half sold, should always be borne in mind. And while this study of the technical position is a point which people get around to last, one security market education is not complete without it, nor can it be mastered without patient study, long experience and practice. I think that's some very wise words there from Richard W. Wyckoff, and I'll be uploading some more in the ensuing weeks concerning Richard D. Wyckoff and also his other books that he wrote on trading and market tactics. Again, check out the Oak Trader Report every Sunday before 11 p.m. Hong Kong time. One of the people that I follow is Richard D. Wyckoff, and a lot of his methods a lot of his methods are represented in the Oak Trader Report, and we try and follow his techniques as well.